Everyone, it's Michael here from B Ninjas. I'm here today just to talk through the latest JobKeeper stimulus announcements from the government, as well as some of the other measures that have been announced over the past couple of weeks. So let's dive into it. I just want to start quickly with this quote. We cannot control the wind, but we can direct the sail. A lot of these awesome measures from the government are here to help us get through as small business owners or as employees or people in the community. So I hope these tools or these kind of assistance packages can help you in what you can control and try and manage your business to get through this period. We're going to touch on some points from all three stimulus packages, including the one announced yesterday on the 30th of March. I've separated all the Fed government announcements into the big four, which I think are the most important for small business owners. Going to look at what the ATO is doing and also some assistance for households and individuals as well. So the big four, the JobKeeper payments announced yesterday are huge, unprecedented. We'll cover that first. Tax-free cash payments to entities that employ staff to help with their wages. That's the cash boost payment. I'll cover that second with some examples because that's a little bit more complicated. We'll touch on the cash support for trainees and apprentices to try and help people keep their apprentices on and not let them go. And then also the access to debt. So some governments helping small businesses access unsecured loans from banks. Those are the big four. Honourable mentions, there's the increased asset write-off, there's depreciation deductions have been accelerated and insolvency laws have been loosened, but you can check them out online and I won't be covering them in this. Let's dive into it. JobKeeper payments, which is essentially a wage subsidy. So high-level view of it is the government's giving employers a subsidy to keep their employees on. In this downturn, obviously, people have been forced to shut, and this is a way to keep staff and employers connected for when the increase in demand and when we get through this tough period starts to turn around, you still have your team with you that you can build the business with, and the economy doesn't take forever to get going again. That's the idea behind this. Who's eligible? Any business with turnover less than $1 billion. So that's pretty much all our clients at the moment. If your turnover has fallen by 30%, by over 30%, you qualify for this. And they'll check what your turnover was like last year or perhaps the month before. So it'll be easy enough to qualify that with the ATO. If your turnover is over $1 billion, it had to have fallen by over 50%. But if your turnover is over $1 billion, you're probably not watching this video. So we won't be touching on that too much. Full and part-time workers. So these are the people who the subsidy will be eligible for. Full and part-time workers, sole traders and casuals with at least 12 months service as of 1st of March 2020. So it's awesome sole traders have been included in this. So if you're a sole trader that's been in business for over 12 months, you can get this. What do you get? $1,500 a fortnight per employee pre-tax, and that will be backdated to start from the 30th of March, i.e. yesterday. So this is approximately 70% of an average Aussie's wage, and this will be paid no matter what you earned before this period. So it's equal wage for all, very egalitarian of the government. As I said, it kicks off 30th of March. The payments won't start being given until the first week of May by the ATO, but they'll be backdated to count this period from 30th of March through to first week of May. So how it works practically is that employers are still going to be paying their staff their regular income, but the employer will start to get this $1,500 a fortnight to subsidize the wage of their employees, which makes their cash flow so much better when, a huge chunk of your wage expense is now taken away and covered by the government for this 6-month period. So it's a massive boost to cash flow for a lot of struggling businesses. So the payments are going to be made to the employer monthly in arrears by the ATO. The employer has to pass on the full amount. I should note this. You can't be taking a margin from this. This is directly to be passed on in whole to the employees. So the idea is to keep people in work, keep people out of dole queues, and reduce the cost of employing people for small businesses or big businesses as well, and keep that formal connection. You can apply it via the ATO, and that's the link there. So if you've already been let go after 1st of March, you can get rehired by your old boss if you were working with them for over 12 months, as at the 1st of March. So you speak to your old boss, or if you're an employer, speak to the person you let go, rehire them, and then start paying them this $1,500 payment before tax. If you've already fired them as the employer, you don't have to pay super, but you do have to pass on this full $1,500 payment. The big benefit for getting back with your old employer is that you get $400 more a fortnight than what you did if you joined the New Start allowance. So if you're on the Job Seeker, you get $1,100 a fortnight. If you're on the Job Keeper, you get $1,500 a fortnight. So there's a big incentive there, if you qualify for this, to still keep contact with your employer and still work with them. So it's worth it if you qualify. It also applies to everyone who's been stood down or had their work paused because of the closures. It applies to New Zealanders who have been working here for over 12 months. And as I said, if you don't qualify for casuals who may not have that 12-month experience with the employer, you can still apply for Job Seeker, which is $1,100 a fortnight. I'll cover that further in the talk. So even employers whose businesses have been shut down on government orders will receive money to pay their employees who cannot do any meaningful work or attend their workplace. Just a quick note on this. This is a great opportunity for businesses to work on their internal processes, explore areas of strength you can pivot into currently, like the online delivery world, virtual world is obviously going massive right now. You can use this time with your staff who are being given this wage to prepare for the bounce back. You can plan ahead. You can take a long-term view of what else you can do with your business in this period. This is a great time to work on your business. It's a great opportunity. You can train up your staff as well. If there's not a lot of orders in your business right now, there's lots of online training that's being made really cheap right now. So I'd say use this time and jump on it, because there's a lot of opportunity to build and work here, even if the business is shut. And you can also look at building stronger relationships with your customers and that brand management through this period, because people will remember how you acted in this period, I think, This is the second of the big four. Tax-free cash payments to entities that employ staff. So this is from the government as a huge bonus to try and keep employers paying their employees or keeping their staff on. So it's a real incentive to not fire anyone, because you're getting these cashback payments from the government. Again, they're trying to keep everyone employed, trying to keep the economy active to get through this hibernation period and out the other end. Any small business or not-for-profit with an annual revenue of less than 50 million qualifies for this. The only catch is that you had to be registered for pay-as-you-go withholding before the 12th of March, 2020. That's to stop people kind of taking advantage of this system, registering now, loading up on their wages to get this cash back. It's obviously just to stop, tax schemes that are outside the spirit of this rule. When's it kick off? With your March BAS. So 28th of April is when your March BAS is due, and the government will make these payments 14 days after the BAS or IAS submission. How it works, payment one, you get back 100% of the pay-as-you-go withholding. So that's the amounts that you're taking out for your staff's income tax. You get 100% of that pay-as-you-go withholding that you paid from the 1st of Jan to the 30th of June, 2020. So for the first 6 months of 2020, they have a look at how much pay-as-you-go withholding, what that total figure is. You get that back, and then you get it doubled in the Stimulus 2 payment, which is awesome. This is capped to $50,000. So once you've pay-as-you-go withholding gets up to $50,000, that's the max that you'll get back and doubled. Payment 2, or Stimulus 2, you get exactly the same amount as this first payment, and you'll receive this during the June to October BAS period. Again, this is capped at $50,000. The catch is you still need to be employing up until the end of September to access this. So you can't load up on your wages and your pay-as-you-go withholding up to 30 June and then come 1st of July, fire everybody, because you won't access Stimulus 2. You can still get, I guess, Stimulus 1, but in order to access the full benefit of this, the whole idea is that you've got people on the payroll all the way through to the end of September. The minimum payment, this is awesome. The minimum payment for eligible entities is 2 lots of $10,000, which is $20K total. So even if your pay-as-you-go withholding for your staff is less than $10,000 for that 1 Jan, 30 June, you're still going to get the minimum, which is $10,000, and then you'll also get the second $10,000 in payment 2 or Stimulus 2. This is automatically credited in your activity statement system once you lodge. No extra forms are needed. And as I said, the first payment is made after you submit your March BAS, which is due on the 28th of April. Let's dive into a quick example of this. This is John. He's the owner. He's got an annual salary of $100,000. He's got an annual pay-as-you-go withholding of $24,000. I've simplified this for the example, obviously. So his quarterly salary is $25,000. His pay-as-you-go withholding for this March quarter is $6,000. With this cash flow boost Stimulus 1, there's 2 tranches or stimuluses, Stimulus 1, Stimulus 2. His first installment in the March BAS will be the minimum payment of $10,000 from the government. This is because his pay-as-you-go withholding is only $6,000 for this March period. So because it's less, he accesses the minimum payment, which is $10,000. Installment 2 in the cash flow boost Stimulus 1, so this is part of tranche 1. You can see for the June quarter, he's also paid himself another $6,000 pay-as-you-go withholding. So total value of $12,000 for that first 6-month period. So the government said, we're going to match what you've paid. So in the payment 2 for this, in June, he gets the extra $2,000. So he's paid $12,000 for the first 6 months. He then gets back $12,000. There's a little bit of confusion with this because Stimulus 1 and Stimulus 2 have an overlapping BAS period, which is the June BAS refund. You can see how he gets $2,000 back here. And so as part of Stimulus 2, the government said, whatever you got for Stimulus 1, we're going to double that, or we're going to match it for the second payment, and it's paid equally over the subsequent business activity statement periods. So because he's paid $12,000 in total for the first 6 months, for Stimulus 2, he gets back $6,000 in the June BAS refund and another $6,000 in the September BAS refund. I should note he has to still be employing people up until the end of September to access these 2 $6,000 payments. So installment 1, installment 2 of the cash flow boost Stimulus 2. It's a little confusing, but hopefully this example gives a little bit of clarity. I should note for people on the monthly installment activity statements, the same concept applies, but payment 2 is paid equally in your June, July, August, and September IAS statements. So that second payment 2, which is $12,000, that would just be divided up amongst those 4 monthly IAS. I'll skip example 2 because we're running low on time. The opportunity, or why everyone's so interested in this, people who currently operate a company or trust and have been taking a trust distribution, a company dividend, or perhaps owner's drawings for the business will now be considering paying themselves on a wage via payroll. People will be looking to max out their pay-as-they-go withholding balance from the 1st of Jan through to 30 June 2020 because you get this paid back and doubled if you continue to employ through to the end of September. I should note if you're making the switch to pay yourself on payroll, you have to take into account additional considerations such as superannuation and personal income tax, things that apply to that. We've had a lot of questions on eligibility for this. For example, can a sole trader access this payment? So sole traders and partnerships that employ others can access this pay-as-you-go withholding rebate, but you can't employ yourself in these structures. So the JobKeeper allowance, which was the first announcement here in this presentation, that's covering sole traders now. So that's kind of aimed in that world. This pay-as-you-go withholding is for sole traders who are employing people. Otherwise, you don't get to access this. So we've had a lot of questions about should I switch to a company in order to access this? The rule states it's for active eligible employers established prior to the 12th of March 2020, i.e. on the 12th of March, you had to be registered for pay-as-you-go withholding and paying staff on this date. So it's for people who are currently employing people. That's the simple way to look at it. So there's a little bit of debate around if you have an ABN and you kind of registered for pay-as-you-go withholding, but you hadn't paid anything for this year, can you backdate it? There's a grey area. I've heard people giving advice both ways here. I would say it's yet to be played out and we're yet to see a concrete example, but potentially, and speak to your tax accountant. How do you predict the second payment? As I mentioned in the example, it matches the first one. So whatever you got for payment 1, you get that back in payment 2. How does this affect my GST debt or current payment plan with the ATO? So this will benefit and offset any existing debt with the ATO. So if you owe them a whole bunch of cash for a GST payable, this will reduce what you owe them for that GST debt. If the deposit takes your account into credit with them, then you should be entitled to a cash refund. In that activity statement system, if you're in credit, you can press cash refund, and then within a few days, or within 14 days, the government have said, you should get that cash paid back into your bank account. And I've mentioned a couple of times, you need to continue to employ into the June and September quarters in order to receive cash boost stimulus 2. The whole idea is to be everyone keeping running in this period while we chug along and get through to the end of this. Great. This is item number 3 of the big 4, cash support for trainees and apprentices. Any small business with annual revenue less than 50 million and less than 20 full-time employees for these 9 months, 1st of Jan through to 30 September. And you can register for this from early April. You get 50% of your apprentice wage subsidised by the government. So it's trying to get you to not fire your apprentice in this downturn. They're subsidising 50% of their wage to keep them on for you. The maximum is $21,000 per eligible apprentice or trainee. And you need to go to this website here to access to kind of get registered and make sure it's all above board. So that's awesome, trying to keep apprentices employed through this period. The last one that I think is really going to help with small biz cash flow is a small business guarantee scheme for unsecured loans. So small businesses with turnover of less than 50 mil can borrow up to 250K. This begins early April until 30 September 2020. You can see with all these timelines, it's all in this next 6 months, these next 9 months. This is obviously the key crucial period that we're trying to keep the economy running to get through to that other side. So for new loans, if you're a small business and you go into a bank, the government has guaranteed that 50% of this new loan, the government will guarantee. So the bank is a lot more likely to lend you money because they know the government is going to kick in 50% of that if it all goes belly up. So the risk for the bank is a lot less, and that means it's a lot more likely they're going to lend to small business right now. The government's guaranteeing 50% of that debt. And for current loans, I'd say the big 4 banks are deferring repayments for eligible small businesses for 6 months. So speak direct to your bank. The banks have been doing a lot in this space, and yeah, get in contact if you've got a number or an email. I'm sure you'll be able to work something out with them. So that's the 4th of the big 4 that I wanted to talk about. Now we're going to cover what the ATO is trying to do to help you. You can defer payments, your income tax payments, pay-as-you-go installments, your fringe benefits tax payments. You can defer them by up to 4 months right now, which really helps with cash flow. GST credits, you can change from a quarterly lodging to a monthly lodging to access your refunds quicker. So you can get cash in the bank quicker because you're submitting each month and getting that refund. Call them and ask to remove the interest and penalties charged. Sometimes you get late payments, late fee payments and stuff like that. So speak to them about that. And also ask to be on low interest payment plans. Interest rates are pretty low right now, but see if you're on the maximum or on the minimum that you need to pay for that. This is the helpline available to speak to them. Give them a call. The ATO, all their messaging has been about helping business through this, so that if you're in a tough situation, explain it to them and they'll be able to do a whole bunch to try and help you. Get those installments to nil, shift your due dates, pause your payment plans, remove interest, and then if you have to pay interest, switch to the lowest possible. That's what the ATO is doing. What about households? You can defer your home loan. So all the big four, and I believe the other lenders have also followed suit, but speak to them direct. You can basically defer your loan repayments by up to 6 months, and the interest is being capitalized. That's pretty much across all big four. The only slight variation is Westpac has said you can defer them for 3 months, and then they'll review it with another 3 months available. Same kind of thing. They'll all basically give you 6 months holiday on this. I should note, after this mortgage holiday, your loan balance is going to be bigger because the interest is added to your loan. So this isn't free money. It just means your debt will be building up a little bit, but it does help for cash flow if you've lost your job or your business has had to shut because of these government new lockdown laws. You can access up to 20K of your superannuation. So employees or sole traders who have had working hours or turnover reduced by 20% or more, and unemployed and job seekers, you can apply via MyGov before 30 June 2020 for the first 10K. So you can get the first 10K this financial year, and then you can access the second 10K between the 1st of July to the 30th September. So after the financial year's ended, you can access another 10K. My own personal take on this is this should be your last resort. Taking your super is stealing from your retirement. The power of compounding means that it's going to build over time. And if you're taking money out of your super now, the share market's taken a massive dip. So you're kind of taking cash out at a bad time. So use this as a last resort. It's awesome you can get this cash if you need it, but be mindful of all the other options possible before you start stealing from your own retirement fund. There's no tax on these amounts, and it won't affect other welfare payments. So just an item of note for that one. Job seeker new start payments. So we went through the job keeper at the start. This is for people who don't qualify for that. So say you're a casual employee, the cafe is closed, and you weren't with the cafe for over 12 months, you're still eligible for job seeker. They've boosted the job seeker allowance by $550. So the total fortnightly welfare payment now is about $1,100. I think base rate like $1,115.70, around ballpark. So if on or after the 1st of Jan 2020, you were made redundant, working hours reduced by 20% or more, or you're a sole trader and your business was suspended, or your turnover was reduced by 20% or more, you can now access to the job seeker allowance. So this is for this boost, this extra $550 a fortnight, taking it to $1,100, is only for 6 months. Again, they're trying to build this bridge. 1st of Jan through to 30 June 2020. Don't go into Centrelink. You can do this via MyGov now. All those queues around the block for your customer reference number, you don't need to do that. Log into MyGov and you can do it that way. This is just dependent on the income test above. So traditionally, they also looked at your assets. They do an asset test and pay you depending on how many assets you have. This has been scrapped for the next 6 months. So if your hours have been reduced 20% or more, your turnover is reduced 20% or more, they're like, hey, you can get this. We know everyone's struggling. So that's really handy for some households. I'll cover these quickly. Pensions and veterans payment. 2 separate $750 cash payments to pensioners, veterans, concession card holders registered from the 12th of March onwards. First payment on the 31st of March for those eligible, and then the second payment on the 13th of July 2020. So that's great for the pensioners. They get an extra $750 times 2. These are processed automatically. You don't need to apply, and there's no tax on these amounts. This is just a cash injection from the government to try and keep people spending money in this time. And retiree support, they've reduced the pension drawdown rates. So people drawing a pension from their super for this year and next year, they're temporarily reducing super minimum drawdown requirements for account-based pensions and similar products by 50%. So this is going to benefit retirees holding these products. It's reducing the need for them to sell investment assets to fund these minimum drawdown requirements. And that's great because you don't want to be selling investment assets in the market right now. That's it. This is a great quote from Nelson Mandela. The greatest glory in living lies not in never falling, but in rising every time we fall. So this is, a really, really tough period for everyone. I hope everyone's staying safe out there. And I'm looking at it as an opportunity to build resilience. And I think we'll learn a hell of a lot about ourselves and our businesses through this period if we can just get through. And these measures give us some tools to play with, give us some things in our control, which I think should be really helpful to a lot of people. If you want these PDFs, I can email them to you. Just tag me and I'll send them to you. The Treasury is probably the best website. They break it down in really simple language, but there's also some links here for job seeker, job keepers, sole traders, and then the ATO as well. So that's all the key websites to check out. If you've lasted this long, go to beninjas.com/webinar gift. This talk was based on a webinar we did last week, so I'm more than willing to offer you the same gift. You can book in a 15-minute call with me. There's a PDF of the slides, and there's a free online course about Xero skills. So if you use Xero and you want to learn a bit about it, you've got some time, go to that website, beninjas.com webinar gift. And there's a whole bunch of other links to other resources as well. Great. Thanks a lot, guys. Wash your hands, stay inside, and hopefully we can all get through this and keep businesses running for a little bit longer. Cheers. Bye.